All right, good morning, everybody. How's everyone doing today? Hopefully you can all hear me without problems. Please type in the chat box that I'm coming through loud and clear. Hope everyone had a nice weekend. Hey, Ron. All right, very good. All right. Hey, John. Good to see you. Hello, Johnny. Nice to see you, too. All right, I'm just going to review quickly what's happened here. Crude oil is currently in a trade and hoping it's going to get one more tick lower, and it just did, so that helps. Well, nope, one more tick. Crude oil got short at 14, maybe 13 with a one tick adjustment around the blue line there, the 20 SMA. It did just hit its target one, coming off of an earlier loss. Looks like two losses, but hopefully by now you know to make your tiny adjustments to work around near-term support and resistance. So this first trade here you should have been able to stay flat on that. Getting short on the pink trade, maybe one tick below the blue line there. Did get in. It was a losing trade. That one lost 23 cents. So now trade number 3, it did just hit target 1. Pretty flat here since our 9 o'clock start time, but stabbing up to a swing high of $85.38. Crude is little by little trying to find its way up to the $100 a barrel range, I think. Anyway, so target 1 reached. That was good for, call it 17 ticks after a little adjustment around the line. Maybe 16 ticks. And the stop should now be at 85.08. Good morning to you, Miles. Hi, Pamela. Let me know if you have any questions regarding this so far. Unleaded gas got very close to its money management level. Getting long right in here at 9, a little after 9, at 45.41. Needing to get to 45.75 for money management. It missed by 3 small little ticks. Did not quite get there. So this can go either way. Currently sitting right at its entry. Looks like it may want to head lower, but we'll see. And the pound Aussie getting long. Pound Aussie getting long, 83.73. Needing to get to a target 3. These are small targets. So needing to get to actually 83.85 to move your stop to break even. And a full, and it looks like it almost got there. And then just a little bit beyond that, 83.86 for your 13 pip target. A little less after spread. So that's going. Not quite as robust as last week. If I remember right, just about everything was a winner right out the gate. The YM getting short here. Heads up, YM is now short at 594. You can catch it if it comes back down. First target is 571. And then 559, 546, and 534. Stop should be at 623. Heads up on crude oil. Keep the stop just above the 50 moving average. Says 85.01. I would definitely keep it at 85.02. It could make a difference. We did get past target 2, by the way, which is good for 28 cents minus a tick or two of adjustment if you made that, but now looking like a pretty decent trade. And look at unleaded gas. Unleaded gas definitely bounced off, found support at the 50 moving average, and just hit its target 1 for 38 ticks. And I would be taking profit at target 2 here, or partial profit, missing by one small little tick off the major key level of 4,600. Target's at 4,601, jumped up to 4,600. You don't want to fight over one little tick. It could still go up. Just don't let this come all the way down is the point. Make some money on this trade. Unleaded gas is one and done, regardless of how this ends here. Not too bad. Again, if anybody has any questions about anything, please let me know. Pound Aussie came up through and did hit its target 3. So this is going to be a one and done session for the Pound Aussie. Trade a day alert service winning again. One and done, although still going. And the YM just pushed through all its targets. Look at that. Targets 1, 2, and 3. And now trailing lower. 581 is the trailer. So I guess the trading gods heard me talking about last week. Everything winning. And here we are again with a repeat performance. The only thing was that crude oil did have this first losing trade, but a nice winner to follow. So keep your stops where they need to be. Let's see, unleaded gas. Unleaded gas is at 4,554. Looks like it's going to push through here. Heads up. There it is, bouncing off the key level again, but it did just touch the target at 601 and went through. There it is. Look at that. Target 3 now in the bag. Target 4. If anyone's trading multiple positions, 46.45. And the stop just jumped up to 45.82. John says trade a day was done by 8:40. 8:40. I didn't see that. Was there an entry here? Oh, I see. Oh, yeah, okay. So the entry was, right, getting in sync. You were able to grab the short. And that one also came down and hit target 2. So, yeah, okay, 2 winners in a row then. Either way, 12 pips or 13 pips, basically the same outcome. I didn't catch that. Thank you, John. And look at the YM. Everything's going our way here now. The YM blasting through target 4 as well. Heads up, stops should be moved to 551. And with the potential of it going lower, notice it bouncing off that key level at 550. I mean, it doesn't mean that the price won't get through those levels, but sometimes those levels hold. Like in this case, it's pushing to a new swing low. And we always want to respect those key levels. Ron, yeah, there was, but you have to also pay attention to the price. You had an SMA trade here on crude, but you also had a very clear and easy adjustment looking to your left. You want to work around the near-term support and resistance. You can make a 3-tick adjustment. That's within the realm of what's permissible, and you need to sometimes. So, I mean, you got to major key level here. Well, no, I wouldn't say major, but 85.20. And normally I'm not going to go from 18 to 21 unless just to my left there's a bar that just showed a rejection at 20. That's the one you meant, I'm sure. So you're allowed to make a 1 or 2 tick adjustment, sometimes 3, rarely 4, and this is a case where it's pretty obvious. You don't want to get long 2 ticks beneath clear resistance that just showed itself a moment ago. And crude just stopped out. 85.01. Yeah, I don't know if there's a let me see. I think I'm broadcasting through my microphone. Can't tell now. Let me just look. Yeah, I am. Yeah, maybe because the room is kind of live. It shouldn't sound terrible, but I do have hardwood floors and a wall and ceiling, and it's possible you're hearing the ambience in the room. Hope it's not too bad, too terrible. Let's take a look at this. So if you recall, when we've been talking about the Renko, 6-point Renko with catapult and waiting 4 minutes on the NQ, we've been kind of watching this now since last week, I think, or maybe even a little longer than that. Yeah, so is the reverb still going? I don't know. I'm not sure what to do about that, you guys. Anyway, so if waiting 4 minutes, like I had suggested, you have a setup here right after the 4-minute start time, and look what followed. All the way down to this nice big fat target 4. This chart is certainly worth paying attention to. And the rewards you're seeing over here are not ticks, they're points. 15 points, 26 points, 37, 48. It's a nice trade on Catapult NQ. And this is the micro NQ, by the way. Yeah, one of those days where everything just seems to be going well. Quick look at Counterpunch. The cash out marks. Johnny, are you referring to the targets? I think you are. You would place bracket orders. So a bracket order is when your entry gets filled by the use of what's called an OSO, order sends order. It would then, once you get filled on your entry, it automatically sends another order that has your targets and your stop predetermined. Okay, you do that with either the Matrix or, depending on what platform you're using, I think you'll be in TradeStation. So the Matrix, or you could even do it right on the chart. You could do chart trading even. And so once you are filled on the entry, a new order is sent where it's called a bracket order because the targets and the stop are attached to one another. So when one gets hit, the other one automatically cancels. So if you have a trade, let's just look at crude oil, or let's look at the YM since that one just happened. Let's say you have a short trade here. You set it up to go short at 35,594, and the price comes down and fills your order. At that point in time, well, when you place the trade, you place it with an OSO, order sends order, attached to it. This is all set up as a template. So every time you place this trade, it automatically sets up the OSO. you're able to decide if you're going to get out at 1 or 2, even more targets you can do. There's ways to do that, different techniques. But ultimately, when you place your trade, you're going to slide your handles to the target levels. You're also going to slide your stop handle to the stop level. And so once this gets filled, it automatically sends the order to the broker to activate your predetermined bracket, your target or targets, and stop. And however many stops you have, depending on how many positions you sent. So if you get short with 2 positions, you'll have two stops. You might have a target 1 and a target 2, or maybe you just have a target 1 and the other one you delete so that you trail, but you still have 2 stops. There's different ways to do it. So if you had a target 1 and a target 2, as soon as the market comes down and hits the money management level here, assuming it hasn't hit the target, you would take your stop and slide it down to where it's supposed to go. Once it does hit the target, that part of the position comes off. Money ends up straight into your account. And one of the stops cancels. So you still have one, or whether maybe it would be here. And you still have one more stop if you have a second position. And if it's coming off at target 2, it hits target 2. The second stop cancels, and you are now flat. The trade is over. So it's a bracket order. I'll definitely get into that with you when we get to that point, Johnny. When you're ready for it, we'll do it. When you start practicing your executions and stuff, I'll definitely help you set all that up. Pamela, that was a 6 point. It's a 6 points momentum bar, and I'm offsetting it by 1/3, by 2 points. So looking at the TradeStation custom Renko chart, whoops, looks like this. Hey, John Lizar, there's a way to use these type of bars with NinjaTrader also, correct? I believe there is. Just waiting for the format symbol to open here. Yeah, John, you always want to trade with bracket orders. You also want to be able to maneuver with single orders. Sometimes you need to do that as well. Something always takes forever for the format symbol to open up. I'm not exactly sure why. Okay, so custom, there it is. 6 brick, that's 6 points. If it was 6 ticks, it would be 1.5 because there's 4 ticks to a point. So it would be 1.5 if it was 6 ticks. 6 points, it's 24 ticks. The offset is 2 points or 8 ticks. Yeah, I think it's really good. Also, I got my targets spread out. This isn't your typical catapult default setting. I had to give it a lot more space so that it accommodates this type of bar. So I'm doing an actual 6 tick entry instead of 2 ticks. I push the stop a little further away. And because of that, we need bigger targets as well. So I went with the 1.5, 2.5, 3.5, and 4.5. And then also the break even. I'm actually needing, I want to go to a target 1 and 11 points. And I find that gives the trade the room it needs. Otherwise, you're going to end up stopping out at break even far too often and then missing the move that you were hoping to make. And then finally, I don't begin trailing until 200% of target 1. So not target 1, but 200% of target 1. So it's like it would be like a 3x, right? So it's in between targets 2 and 3 is where that is, where it starts trailing. And then what else? I think that's really the most important thing here. Yeah, that's about it. So, hey, John, if there's a custom Renko, the strategy itself, is that going to work on it, or does it have to then be, I mean, do the indicators work, or would they have to be, would there need programming to like fit it to a third-party Renko? Standard half Renko? Not sure what that is. Yeah, anyway. Unfortunately, there are no perfect trading tools that exist. You have to choose this over that. You have to give up this to get that. Ninja gives you one thing. TradeStation gives you another. Nothing's perfect. Be nice if somebody came out with a superior charting platform that could do everything we wanted it to do, but it just doesn't exist. We have to just deal with what we have. So I got a really good question in the mail, in the email, my email. Someone was asking me, they have a really great trade plan that they developed with Trade Assist. They love the results. They want to start trading it. And the question was, what's the point in going through all the UTA work and manually entering trades into the spreadsheet, reviewing the charts click by click, as I always recommend. If I already have a trade plan developed with the automation and I'm very happy with the results, why don't I just start trading it? It's a good question. I'm curious. I'm thinking some of you know that answer, what the answer is. Maybe some of you don't. But I wanted to bring it up here on this YouTube stream because it is a good question, and I'm sure it's been on many traders' minds at some point. And there's an answer as to why. Actually, there's numerous answers that you need to consider with automation, especially with futures. It may not be quite as important with, say, swing trading equities, for example, or even Forex. But with futures, we're trading contracts that expire. And there's always gaps between contracts. So that's a big issue. You really want to test the actual contract that you're trading, not the continuous contract where numbers have been back adjusted. And maybe even more importantly, the rollover to the new contract always happens at the wrong time, at least with TradeStation. We want to roll over when the volume rolls over, not when the software says roll over. And so that's a big issue. So the test results from the Trade Assist are coming from, there's going to be several days perhaps in between during the rollover process where you're trading the wrong contract. And there could be gaps between the two contracts, which means, of course, that's a problem too. Another thing is that you can't use key level adjustments because when the charts back adjust, as they move forward, the numbers back adjust, they change. So if you were to look back at the trades that are being shown and then open up a real contract, they wouldn't even be at the same numbers. The numbers change. They back adjust to smooth out the contract. And so you can't use key level adjustments because if you do, then you're adjusting around back adjusted numbers that never actually occurred, and then that changes the entire session and sequence, maybe even the whole week. So that's no good. But there are other reasons why it's no good. For one thing, the automation is always working with bars that have already closed. So it has to wait for the bar to close before moving a stop, for example. So sometimes it'll show the trade losing when we know we would have broken even because we would have moved the stop. That's a pretty important consideration too, is if you're moving the stop intra-bar before the bar closes or not. And with a lot of our day trading, we do. As soon as we hit our money management level, we move our stop. But the automation is not going to do that. So I don't know, the other way, maybe the automation's way of doing it is fine. That could work great. But there are other things too, like we saw on crude oil this morning, that first trade, the one that Ron asked me about at 9:05, the automation, of course, will get you into that trade because it can't think for itself. It's not going to know to adjust 2 or 3 ticks above the resistance. It's clearly shown by the bar on the left, by the price action itself. It's not going to know to make that adjustment. That's going to be a losing trade with automation. But for us, it should just be a non-trade, you see? And those kind of considerations happen all the time. And there are others too. You might want to get in sync. Maybe a trade sets up before the start time and you want to take it once it is our start time. You can still catch the entry. Automation won't do that. So for example, on the pound Aussie short, that setup was at 718 and it did trigger in. So that trade would not have been considered, but our trade plan says we can take it at 8:30. And right at 8:30, you can see right in here, it did trigger in and it was a winner, one and done. Automation can't do that. So while automation can give you some big picture direction and answer some questions and kind of point you in the best direction, it can tell you perhaps the best settings and inputs to use. It could tell you, for example, maybe some different catapult or maybe a different balance line. It could do plenty that we want. We can do a lot that would be very difficult to do manually. But in the end, if you don't click through your charts and look at your trades and actually see what's happening, you're never going to fully understand it. And not only will you not understand it, but as soon as you hit a rough patch and problems happen and you hit a little drawdown, chances are you'll quit because you didn't do the manual effort, you didn't do the work of entering the trades one by one so that you can see them, visualize them, experience them. That's another big deal. Automation, you were never going to experience the trades that gave the result they gave. You like the result, you're ready to start trading it because the results are good, but you did not experience any of those trades. And inside of those trades, inside of those sessions, there's some ugly. And the best and most important reason to use the UTA spreadsheet and do the manual effort work is to experience the good, the bad, the ugly, and the great. The good, the bad, the ugly, and the great. The good, the bad, the ugly, and the great. I'm repeating it over and over because that's the thing you want to experience over and over. Because despite the ugly, you'll experience the great and you'll witness the equity curve going up and up and up. And like this, you take ownership of your trade plan to the point where you actually can believe in it. And automation is not going to give you that. Intellectually, you can look at it and go, wow, these are great results. Okay, I believe. I'm ready to start trading tomorrow. And as soon as you do, you hit a small losing streak and you quit. What happened? Well, the only thing that happened is that you quit right before the next winning streak. Perhaps. Not good, right? So there really is no substitute for the manual effort. There isn't a substitute for it. If you do it, you'll be better off and your odds of success will go through the roof. Trading's so hard, you want to have the best odds of success, right? I mean, why would you want to have less than the best odds of success? So all these reasons are why the manual effort, manual backtesting, the UTA work, the way I always teach it, is so important. And I wanted to answer that clearly on this video because then I could point to this video. Every time I get that question, I could say, go watch this video at about the 25, 23 minute mark or wherever. Maybe it was the 20, yeah, right around there anyway. All right, so there you go. Sorry you had to indulge me on that, but I wanted to get this again on video, on the record. And the person that asked me that question, now he's not here today, but I'm going to send him to this video. And hopefully you guys also were reminded of why that kind of pre-production work is so critical to your success. Now, after all of that, blah, 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 which hopefully was important enough for you all to all hang out and continue to listen to it. Now I'm looking back at the questions here. John says the standard half rank goes available. Pamela on micro, not the normal risk. So yes, larger targets and trailing with multiple positions works. Yes, Pamela, it gives you the ability to scale up and grow your account safely. So once you do your pre-production work that I just got done explaining, and you dial in that trade plan that you've practiced and believe in and understand 100% now, you can see the good, the bad, the ugly, the great, and the equity curves going up and up and up and up. And then you practice 25 in a row without a mistake. That's next. You want to be able to execute with bracket orders, right, Johnny? 25 mistake-free trades in a row. That means not trades that win 25 in a row, but trades that you execute perfectly according to your trade plan rules. 25 in a row. Maybe that takes you a couple months, because really this is your dress rehearsal. This is your chance to prove that you're ready to be the CEO of your trading business and trade it to success going forward and consistently. Why risk your money prior to doing that? But one good thing about the micro is that you could start small, real small. I mean, it's literally $2 a point. So if you think about it, if you look at, let's just look at some of these targets. I mean, these are some nice looking trades, but clearly you're going to get some up, down, which is going to lose also. That happens. But if you look at this first trade here, way back here, get some average target sizes so that you can figure out your average risk. Of course, if you do the UTA work, you'll get the average sizes. Okay, but in this case, the average risk is 14.5 points. So 14.5 points is what? You got $2 a point. So that's $29. $29 is your risk to target on this trade. Your risk on this trade. Of course, you want to get your average risk. The risk on the trade before was less. It was 9.5 points. So 9 times 2 is $19, right? $2 a point. So with that kind of knowledge, you should be able to then determine how many contracts. Actually, all you have to do is look where it says here, contracts 13. So you open up the calculator. Let's say you're starting with $5,000. You put in $5,000 and you want to risk 2%. Now per trade, it's going to tell you how many contracts you can risk. And you should only do this when you've got your 25 in a row without a mistake completed, right? Let's say you've done that. Well, this lets you only trade 3 contracts. So it keeps you safe. 3 contracts, it's like $100. But you can get out at targets 1, 2, and 3, for example. Or targets 1, 2, and trail. Or whatever you decide. Based on your UTA work, you can decide the best targets to exit. You see? So you have so much information at your disposal when you're making a trade decision. You have the pre-production work that you now know how to do step by step. You are going to be far better off than, I would say, 95% of the traders out there. You're going to have so much. This is the power of structure. It's one of the 12 powers. The power of structure. With this structure, you're just better off, because right at a glance, you can easily see what you can risk in live time. You know your entire trade from start to finish. You've practiced it. You can execute it without mistake. You believe in it. You've lived through the good, the bad, the ugly, the great, and witnessed the equity curve growing. I mean, that's as close to a sure thing as you will ever get in trading. You cannot get more of a sure thing than this. This is as sure as it gets. Now, I'm not saying this chart, this trade plan. I'm saying the model that I just described. If you go through that effort and put that together and then practice until you can execute it perfectly, and you trade with this kind of structure, I mean, what could ever be better, right? Something that wins 100% of the time. Well, I mean, we could all dream, but you're not going to make any money dreaming. John says the indicators work on the custom program bars. That's great. And the 1/2 offset, maybe that's good too. I haven't tested it. I do know that I like the 1/3 offset. So you could try the 1/2 bar offset like John is saying Ninja can do. There are several custom wrinkle packages available for reasonable price. Yeah, get the tool. Sorry, broadcast is 4 minutes behind. No worries, John. I know. I don't know why that is, because it's on super low latency. But who knows? That is a drawback with the YouTube streaming. I could see a case, and this may happen, where we move the trade room to something that's, designed for this sort of thing. I'm not sure that YouTube is really designed for a live trade room such as this. So really, this is a training room more than a trade room, just to be clear. Here to teach you. Obviously, if I tell you what to trade, you hear it a minute or 2 or 3 or 4 minutes later. It's water under the bridge. It's too late. But still, I want you to leave here with something valuable that helps you guys improve. Craig saying, laughing, saying so true, and I can only guess that you're commenting on what I talked about as far as just all that pre-production stuff and being better off. Dan understands. 25 perfectly executed trades according to trade plan rules. Johnny gets it. Pamela, at least 25 in a row. At least. Yeah, so here's the thing. 25 in a row in sim mode, and then another 25 in a row with real money, maybe a single micro and no more. Or maybe 2 if you're going to trail. But I don't want you to put on a full 2% risk. So basically, you have dress rehearsal, right? That's your 25 in a row in sim mode without a mistake. If you make a mistake at 24, you start over again. That's why it could take you a couple months if you're really doing your trade plan. I mean, you could practice executing trades over and over and over again beyond your trade plan start and stop times just to learn how to execute. But that's not the same as running your business properly 25 in a row. That takes more patience, it takes more dedication, but I do think it helps you more because it also teaches you discipline. It also teaches you to stop, sit on your hands when the plan says to do so. Because otherwise, let's just say you're going to practice your 25 in a row and you got your trade plan and it starts 4 minutes after, and you take that first trade and you get it right, win or lose, and now you do the next one and the next one, and now your session's over and you're like, oh my gosh, I only did 3 trades and I got to do the 4th one tomorrow? And who knows how long it's going to take to do 25 in a row? 6 weeks later, you're placing your 25th or 24th trade and you make a mistake and you're supposed to start over again? Here's the thing. If you practice just trading straight on through 25 in a row beyond your trade plan rules, subconsciously you're going to be reinforcing a bad habit. What makes you think you're going to be able to stop when you do decide it's time to go live with your trade plan? You've practiced trading beyond your time. Maybe you did well. I don't know. Short sample size, small sample size, anything could have happened. You could have done really well, confirmed a bad habit, and then you start trading for real and you've taken a little heat. You don't want to lose today, and so you keep trading beyond and take even more losses when you should have stopped. You see the problem with that? You want to practice how you play, and you want to practice running your business how you intend to run your business. And I don't care if it takes you 3 or 4 months. This pre-production work, it's a small price to pay time-wise for something that will last you for a lifetime going forward. I'm not saying the trade plan will last and run forever, but your skill of creating a winning trading business, that will last you a lifetime. So be patient. Take the time it takes. If you want to practice executing trades, do so to your heart's content. But don't do them haphazardly. Execute them. Learn to execute properly. But don't think for a second that's the same thing as practicing running your trade plan as a business. It's not. It's different. A lot of people don't get it. They don't think that deeply enough about this. You want to reinforce really good trade habits, but you also want to reinforce your own training of being the CEO of your trading business. It's not the same thing. So when I say 25 perfectly executed trades in a row according to your trade plan rules, as J Ho Money just put in the chat, that could take you time. What if you're one and done? You're one and done, you executed perfectly, you have 24 more trades to do? Well, the next one's tomorrow, right? If you're running your business, you want to practice running it like a CEO, this is the hardest thing for people to do. But it's because discipline is the hardest thing for people to have while they're trading. So teach yourself discipline. Be patient. Yes, you're going to live long enough to see the fruits of your success, right? I doubt a tree branch is going to fall when you're crossing the street and bump you on the head. Probably won't happen. Take your time. A lot of you have been here for a very long time already anyway. You've already been with me, some of you for years, some of you for months, some of you for weeks, but for sure you've been with me a while now. So time is relative. What's most important is that you get it right. And so you do the 25 in a row in sim mode, running your business without a mistake, however long that takes, because if you can't do it, what makes you think for a second that you're going to be able to all of a sudden do it with real money and be successful? You won't be able to. It's all about getting proof of concept, and proof of concept is more than just proving the trade plan makes money through your UTA work. It also proves, you also have to prove that you can make money executing and running the plan. Otherwise, you develop bad habits that are almost impossible to break, and you're constantly going to be wondering why you can't succeed. You have to practice success to realize success. Practice how you intend to play. Practice like a wimp, you're going to play like a wimp. Practice hard, you're going to play hard. So I want you to practice this for real, get it right, and you'll see down the road. The patience is the hardest part to trading. It's going to teach you that. Down the road, you'll thank me. So, again, 25 in a row in sim, and then that goes from dress rehearsal. You're now able to join the JV team. The JV team lets you trade with real money, but the smallest possible position possible. The smallest possible position you can. 1 micro lot. Now can you do another 25 in a row perfectly with real money on the line? Once you pass that, you've earned the rights of passage to land on the varsity team. Understand? So it's that 2 25 in a row blocks, 1 in sim, 1 with real money, but the smallest position size possible. And now you're ready to be the CEO. Now you've graduated. You're on the varsity team now. Very few people get that far. Most people skip the steps. Most people don't have the discipline to finish this process. The ones that do, well, I've received emails from some of them. One guy I know, trading DAX futures, he hit his critical mass some time ago. Sent me a big thank you. I think I've told this story many times. He used to ask so many questions. In fact, at first I found myself getting annoyed because he was asking just so many questions. My inbox is filled with half a dozen emails from him nearly every day. And then it occurred to me, I shouldn't be upset. I shouldn't be annoyed. I should actually be pleased, because this is a trader who's getting it. He's asking intelligent questions. They weren't dumb questions. Yeah, some of it needed repetition. That's fine. That's normal. But now I'm so proud of him. I mean, he took a strategy I created, but he made it his own, developed his own trade plan, did his pre-production work, went through the process, and he sent me an email. I hadn't heard from him in a while, actually. I thought he flamed out. I was so wrong. He hit his critical mass, where he's trading his maximum size on the DAX. 1 to 3 trades a day, I think it was, maybe an hour. I forget what he said. I mean, I don't know. To me, that makes it all worth it, but I just find that incredible. And it should be an inspiration to all of you. Another story, gentlemen, I got this, not one of my students, but I read him in a book called Millionaire Traders. Gentleman from South Africa, as poor can be, dirt floor, corrugated tin hut, saved up his life savings, $200, wanted to be a Forex trader so badly, opened up a Forex account, started trading, and proceeded to lose 10% of his account. He was devastated. Like, it happened quickly. You might be thinking, oh my God, he lost $20. I mean, that doesn't even buy you a cheese sandwich anymore. $20, that's 10% of his life savings. It's all relative. That's a lot of money. For him, it's a lot of money. It's all relative, right? He figured it out. He learned from that mistake. He figured it out, and he's featured in Millionaire Traders as a millionaire Forex trader. To me, that's just incredible. And the themes that he hit upon on how he did it was basically what I'm telling you. You get that trade plan, you prove it, you execute it, and then you run it in a disciplined fashion the same way each and every day with proper money management. Eliminate your mistakes. Don't try to outthink your trade plan. You're not as smart as the trade plan, etc., etc. Same theme, only I'm giving you now a step-by-step, like, things to do process. It's not just concepts. It's actually tangible stuff to do. We're not just shoveling smoke. You're actually lifting a finger and doing things. But that's where the difference is. That's the difference maker. Pamela, what are you trailing? Good. Yeah, I think it's just the typical 14. Let me just double check. Yep, 14 EMA. So I really tried to stay with as much of the default catapult trader as I could. You could trail other ways. Let's face it, you certainly could. And with a micro, here's another concept, and I haven't really talked about this much because, you don't have to be perfect to make money. But you could split your trailer. You could trail different techniques. Like, you could have a looser trailer. You could have a 1-bar stop trailer. Maybe when you get past target 3, you start doing a 1-bar stop or a 3-bar stop. I mean, it's kind of endless. But I like the 14. I think it's a pretty good compromise. Remember, I'm forcing it to go to the, before it starts trailing, it's got to go to the, what did I say? It was the 3X. It's 200% of 1X. And 1X is 1.5. So 200% of that would be 3X, but I don't have a target at 3X. I have a target at 2.5X and at 3.5X. So the trailer will begin midway between targets 2 and 3. If I'm doing the math right. And then it starts trailing the 14 EMA. But you could use the catapult sophisticated tools if you wanted and begin trailing and tightening up your trailer at a certain point. So you could start trailing a faster catapult line at an X level. So you put in your X level where you want to start trailing, for example, the 6, the catapult 6. So let's say you want to do that at target 4. We'll say target 3. So put in 3.5x, right? Because that's where target 3 is. And then now watch how it'll start to clamp down and trail the cat line. You can't really see it because, wait a minute. Oh, I didn't change it to 6. It's trailing the 2. I don't want it to trail the 2. You could trail the 2 also, but what you have to do is also then tell it right here, cat line. See, it's set to 2. You have to turn that to 6. This is a separate trailer. Uses an additional cat line. It could be a 9. It could be a 14. It could be a 27. You can trail all different kinds of cat lines. This is one good thing with automation. But if I make it the 6 so it's easily visible, now you see when it got to the 3x, this bar hit stab down, the stop clamped down and started trailing the cat line. So that's something you can do and you can test and you can have fun with. You could trail more than one because with micro lots, you have the ability to split your positions, much like you can do with Forex, right? You could just take some off here and some off there as your position grows. So that's one thing you can do. Another thing, you can do both actually. Let's leave that, but then let's say that when we get to 4.5x, that's a half an x beyond the fourth. Oh no, that's the fourth target. Let's say when we get to target 4, we want to trail a 1-bar stop. So this is set to a 3-bar stop. You make that a 1. Now it's going to trail every bar that closes on the way down, right? Once it gets to the 4th target. So it didn't have a chance to do it on here because it didn't get to the 4th target before stopping out. But you can see here that your you move to break even, you're trailing the 14. It moves low enough where you can now trail the 6 cat line, and then it moves even lower still, so now you're trailing 1 bar at a time all the way down. Pretty cool, huh? That's a powerful tool. Now, I want you to see something. This is where, maybe the automation can really help you if you look at a large enough sample set, because we're only looking at 1 or 2 trades. That's 1 or 2 samples. I'm only showing you this just to show you how this all works. And there's another thing I'll show you in a moment, but you can use the automation to determine the best trailing combination, because notice this clamps down here based on what I typed in. But if we just would have let it trail the 14 moving average and nothing else, it would have come all the way down to there. Would have been better. Whereas this would have been better, right? A little bit. So you don't know which one's really the best until you can test it on a big sample set. So there's plenty you can do, and you're never going to be perfect. So the other thing you want to factor in, I'll give you 2 more concepts that could really help. 1, how long you want to trade for. Like sometimes maybe you just want to grab that profit and be done, because getting out here is a lot sooner than getting out down here for a couple more points, maybe 6 more points or 6.5 more points. So, it's not that big of a deal when it's only, 2 more minutes, but what if that's 90 more minutes, right? So that's the thing. Those are factors to think about. Another factor is this concept of a maximum excursion. Does anyone know what that means? It's hard to find out what it is, or some software will actually run a test and do a bunch of mathematics and figure out the likelihood of a maximum excursion, the greatest distance that a price is likely to trail before moving up and hitting the trailer. So I found a real simple way to come up with a pretty decent number, a pretty decent answer, and that's our handy dandy fixed target. Like, look at the fixed target. There's a reason why it's here. Like, I didn't just put some random number. If you're using the automation and you turn off all your positions except the fixed target, right? You put one contract on a fixed target, that's all. And then you optimize it. Optimize it and try to see where the largest place it should be. You could also try it with multiple positions because that will change things. But what I found is that this is a pretty good place for it. So you could trail, but then when you hit your maximum excursion level, exit. So you don't wait for it to go all the way back up and take you out of the trade, then giving up all that movement back up to the trailer, right? You just get out at like the perfect place. It's not always going to be perfect, but you see my point, right? If you could use a trailer to ultimately then exit at a fixed target that I'm calling the maximum excursion. The excursion down to this target. That's an interesting concept. The setting I have for this chart, and like I said, I didn't just pull it out of my rear end. I actually tested for it. It's 156 ticks. Divide that by 4, and that's how many points it is. I forget. 156 divided by 4. I should be able to do that math in my head, but I'm tired. 75, 76, what is it, like 38 points? Let's see. 156 divided by 4, 39 points. It's a 39-point maximum excursion. Not bad. So on a full-size NQ, that's 39 times 20, right? 390. What's that? $780. But on a micro, it's only $78. $78. But still, that's pretty good when you've only risked much less. Anyway, you get the idea. There's so much you can do. And you don't have to do all that, but it's nice to know you can. So let me just turn them all off, and the way we do is we just go to the X factor that activates them, and we put in a bunch of 9s because the likelihood of it hitting a 999,999X is pretty thin. Probably won't happen. So by putting in an X that can never get hit, you in essence turn that feature off, and then it just trails the EMA. You could still have your maximum excursion target. All right, just looking at these questions here. Is there a list of good FX brokers you recommend? Well, it depends on where you're at, Craig. Ultimately, I would recommend a broker overseas if there's any way to do it, and I just don't know. There's maybe some legal issues. Maybe there's a way to form a foreign company, and that foreign company could open up a foreign FX account. But again, I don't want to give you advice that might have legal effects, tax effects, whatever. But if you can, let's say you do open up an overseas FX account. If so, you can trade crypto as a Forex pair. You can trade futures as a Forex pair. You can trade CFDs, credit spreads, and get tax advantages if you're European. And those are interesting opportunities that U.S. traders and U.S. brokers don't offer or we can't enjoy as a U.S. trader, unfortunately. Because politicians who seem to know more about us, about trading, and how, they want to protect us from ourselves. So go figure, whatever their stupid reasons are for regulating such a thing is just asinine to me. Maybe one day I'll tell you how I really feel. But if you can figure out how to do one overseas, like I'm overseas now, as you know, and I'm working with my good friend from Pecunia Systems, FX Synergy, and we're literally working on some integration with some of my strategies with FX Synergy. Okay, I'll let the cat out of the bag. I'm working on a Counterpunch Express 3, and it's going to be like nothing else that I've ever done. But ultimately, FX Synergy will be able to grab the trade and place the trade with a click of a button, along with some other cool functionality, so that you literally could trade the euro against Bitcoin or the US dollar against Ethereum or whatever as a Forex pair using Counterpunch Express trades. Pretty cool, huh? Apart from that, Craig, I use Owanda here in the United States, Oanda. Owanda. They'll give you a free MT4, and you can connect that to FX Synergy. I have it set to New York time so that it's really close to matching my TradeStation charts. It's not perfect. Remember, every Forex broker makes their own market. It's not centralized. One chart will not be the same one to the other. Another thing I strongly encourage and recommend is that you go with a commission plus pricing model. If you can pay a little commission and get a fixed spread, or the lowest spread that the broker offers, but you pay a little in commission, that's what you should do, for sure. And I know with Owanda, it's maybe not the best commission spread arrangement, but it's a lot better than going with just spread only. You're going to save for sure at least a full pip or more of spread, even after paying commission. After paying their fees, your spread's going to be down to where, like the pound Aussie, it'll be less than 2 pips, mostly, on average. It could be 2.3, it could be 1.8, but you pay a tiny bit of commission. And the commission slides. It's a sliding scale based on your position size. I mean, $1 in, $1 out is not going to help you on commission if you're trading a micro, but it won't be. It'll reduce according to your position size. So it's really just paying pennies, and you're saving pips. So highly recommend it. Craig, follow up with me if you'd like, and of course you can Skype me anytime, as you know. Ron, Troy, you have it at a 6 brick and what offset? Yeah, so Ron, the model I've been using to keep things really simple, no matter what symbol, is whatever my brick size, I'm offsetting it by 1/3. So if it's a 6 brick, it's a 2 offset. On crude oil, we like to use the 8-tick momentum bar, but there's no real clean 1/3 offset. So I don't know. Maybe you could try a 9 and a 3 or a 6 and a 2. If you choose 8, I don't know if you would do a 2 or a 3 offset. I mean, it's not that perfect 1/3. It might not have to be. You know, at some point, I'm just looking for a model. And what I found is that when I offset the brick by 1/3, you just seem to get charts that look like this one. So this is the NQ, but I've seen other charts look similar with that 1/3 offset. Craig, we should trade the chart in front of us. Yeah, but here's the thing. If I have a Forex broker with Owanda, I'm not going to have their MT4 chart as the chart in front of me. I could, but I don't. I have it off on the side somewhere with FX Synergy attached to it, and I'll open up FX Synergy, and that's where I'll place my trades, but I'm trading the chart in front of me, and the chart in front of me happens to be this TradeStation chart. So, for example, this morning when the short came in on the pound Aussie, and that trade came in at 87.76, it should be 74 really, because you adjust around the key level, but whatever. I'm going to put it into my FX Synergy at this price level here. I probably should refer to where the price is on MT4. I might need to finesse the order because it's a little bit different. Could be off a little. I might want to give my stops and my stop and reversals a little extra breathing room in case Owanda gets there sooner or widens or spread a little or whatever. I mean, again, there's nothing perfect, and that's the problem, especially with Forex. But you learn it. You learn it as you go. When TradeStation misses a stopping out by, say, 0.2 pip, but a Wanda stops you out, you're trading the TradeStation chart. It shows you're still in the trade, but a Wanda said no and stops you out. You realize that you have to make bigger adjustments to account for spread, to account for the broker, the variation, or just the fact that they could be hunting your stop. You could always use Synergy to go into stealth mode. Stealth mode hides the price from your broker until the last possible second and then sends in the order. There are things you can do, but you have to learn that. Johnny, 25 in sim, 25 in live, not just micro, but minimum position size possible. So the idea is, every market's different. You don't always have a micro on some markets. Forex lets you trade a nano, believe it or not, some brokers anyway. So the point is that you want to be able to trade with live money because that affects you, even if it's small money. Live money is not the same as sim. Not only that, but sim is sim. It's not what really happened. It simulates when it thinks you get stopped out, it comes close because it's not the same as live trading. What happens in live trading isn't always what happens in sim and vice versa. So you practice at 25 in a row with live money, because what it does for you psychologically, the idea is you want to learn how to become detached, even though you have your live money on the line. And the reason why that's so important, I don't always explain to you the depth of the reasons why these steps are as important as they are. And maybe I should, but one of the reasons this particular step is so critical is because of why traders fail in the first place. We want to run away from pain. Pain represents extinction. It represents a threat to our survival, and we want to avoid it. That's why all bad things that happen to you hurt, so that hopefully you don't seek it out. You learn to avoid pain, right? You don't keep touching a hot burning stove after you've singed the skin off your fingertips. But in trading, that's exactly what you have to do. You have to reach out and touch that hot burning stove again and again and again. So by trading with live money, it teaches you how to detach yourself and to not be emotionally attached to the outcome of a trade, so that when you touch that hot burning stove, you've got protection on it. You don't feel it. You don't feel it, and it's not singeing your fingertips either. See the metaphor? You can't teach that to yourself by talking yourself into it. Yeah, we're all smart enough. We're all intellectually capable of understanding that. But your instinct for survival is far more powerful than your intellect, to what you rationally know. If that weren't the case, then we wouldn't do stupid things due to emotional responses. And we all do. Yeah, maybe to be able to trade properly, you have to kind of have a good handle on your overall philosophy about things. Ron, do you have a video showing that Cat NQ Renko setup? Now I do. It's right here. It's going to be here on YouTube. I don't have one specifically for that, Ron, but this video will be available to double check anytime, and you could always ask me also. Certainly happy to answer your questions anytime. Craig, you always give really good advice. Thank you for the reminder that we need to practice like we would really trade. Perfect practice makes perfect. Yes, and sometimes you have to hear that also enough times. Everything is about repetition. When you're trying to retrain yourself or teach yourself something, you want to get to the point where you don't even have to think about it anymore. You want to get to the point where it's just a reaction. When you ride a bike, I'm going to assume you've learned how to ride a bike. You get on the bike and you start pedaling. You're not thinking about keeping your balance, not falling over, swerving around a pothole. You just do it. It's just something you do. It's a reaction. It's a reflex. I want your trading to be like that. And you get that from repetition, including practicing. Well, that's the point. That's the reason why you want to practice the way you play, right? Because that's the repetition that you're going to end up doing when you go to real trading. So there you go. And I think I got through all the comments. I'm right about that time where I'm ready to end the session. Been in here about an hour and 10 minutes or so. I think I've given you all I got today. Obviously, you can see the strategies are just killing it. I mean, this is Spotlight Master Suite mostly. You got a catapult on the left. We didn't look at Counterpunch today. I'm not going to now. We could always look at it on Wednesday if you need to. But Spotlight Master Suite, just it keeps doing what it does. We see it every day. Usually wins. Sometimes it doesn't. Catapult also. I mean, I don't know. Can only show so much. Only got so much real estate here. If I ever don't show you what you want to see, if there's ever something you want to review or look at or whatever, just let me know. I'll pull it up. We'll review it. Keep a notebook. Write down your questions. Sometimes you get questions. If you don't write them down, you forget. 2 days later, when we're back in here, you forget to ask me. Just stay organized with your questions. I'm happy to answer them all. Definitely want you guys to continue to get positive experiences from your time spent with me here. Other than that, my voice is little by little getting better, but I still feel like when it gets strained, I can still tell. I can still, it tells me when it's time to rest it. But good news is it's nothing serious, and I'll survive it. The bad news is I just kind of have to realize that there's no beating Father Time. When you get older, things start to break down. It's just the way it goes. But my voice is still, I'm not at risk of losing it or anything. It's just, I don't know. It would be nice if it would not feel strained anymore. So hopefully I'll get over that part of it before too long. All right, guys. Everyone have a wonderful rest of your day. I'll see you back here on Wednesday. And until then, adios.